Have you ever wondered what it means when Warren Buffett starts buying again? This isn't just a billionaire making trades, it's a signal, a move that could ripple across markets and shape the financial future for millions. Buffett isn't your average investor, he's the oracle of Maha, a man whose every stock purchase is studied like gospel. And now he's making moves. What's driving this sudden buying spree? What does he see that others don't? And most importantly, what should you be doing about it? Let's break it all down. Why Buffett has been holding back? For years, Warren Buffett has been a fascinating paradox for investors around the globe. The man who has built his legacy on finding value in the stock market has, for a considerable time, seemingly resisted the urge to buy. Instead, he let Berkshire Hathaway's cash pile grow, reaching an astonishing $147 billion at its peak. This wasn't indecision, it was strategy. To understand why Buffett held back, we need to dive into his mindset and examine the lessons history has taught him. One of the most compelling examples of Buffett's restraint comes from the dot-com bubble of the late 1990s. While everyone else seemed intoxicated by the meteoric rise of tech stocks, Buffett stayed out. Back then, investors ridiculed him for being outdated, unable to grasp the future of the internet. But Buffett wasn't ignoring the tech revolution, he was evaluating it. Most companies didn't have solid business models or profits, and valuations were entirely detached from reality. When the bubble burst, many of those high-flying stocks plummeted to zero, and Buffett's reputation as a cautious and calculated investor only grew stronger. Fast forward to recent years, Buffett faced a similar conundrum. Markets were surging to record highs, driven by easy money policies, unprecedented government stimulus, and a frenzy for speculative assets. From meme stocks to cryptocurrencies, the investment landscape seemed more driven by hype than fundamentals. For someone like Buffett, who views the market as a weighing machine that eventually balances value and price, these were dangerous signals. He refused to chase the rally and instead stood by his principle: never overpay, no matter how enticing the trend appears. Consider the pandemic-driven crash in 2020. For a brief moment, the market collapsed, presented by opportunities. Buffett sold airline stocks, a controversial move, and instead focused on ensuring Berkshire Hathaway had ample liquidity. This decision drew criticism, but his long-term thinking remained unchanged. Cash is not just a reserve, it's a weapon. Buffett knew that the real opportunities would come when the euphoria waned and panic set in. This patient approach reflects his mantra: be fearful when others are greedy, and greedy when others are fearful. As the market became increasingly speculative, Buffett's decision to hold back wasn't just about avoiding overvalued assets. It was about waiting for clarity, for value, and for the kind of investments that build wealth over decades, not days. This is why his cash pile wasn't in action, it was preparation. Now, as Buffett steps back into the market, the moves he makes will undoubtedly be worth watching. If you enjoyed the video, hit the subscribe button and comment down your thoughts. If you want to explore money-making strategies, click the link in the description to start a financial journey. What Buffett is buying and why? When Warren Buffett starts buying again, the world takes notice. Known for his almost prophetic ability to identify long-term value, Buffett's recent acquisitions are stirring curiosity and excitement among investors. What's fascinating isn't just what he's buying, but the reasoning behind it. A blend of his timeless investing philosophy and the unique circumstances of today's markets. Buffett's purchases often reveal a sharp focus on companies with proven resilience. Take his long-standing love affair with Apple, for example. While some initially questioned his pivot to tech, Buffett recognized Apple not merely as a technology company, but as a consumer powerhouse with a devoted customer base, consistent revenue streams, and extraordinary cash flows. Now, as he adds to his holdings in this space, Buffett's actions remind us that true value isn't about industry labels, it's about enduring business fundamentals. His recent forays also include heavy investments in energy. One standout is his deepened stake in Occidental Petroleum. On the surface, it may seem like Buffett is chasing rising oil prices, but this move goes beyond a simple commodity play. Buffett knows the global energy transition is reshaping markets, but he also sees that oil and gas companies, particularly those with strong balance sheets, like Occidental, will remain vital for decades to come. The cash flows from these businesses are massive and, in his view, underappreciated by the broader market. Another intriguing area of Buffett's buying spree is infrastructure. Through Berkshire Hathaway's subsidiaries, he's been positioning for long-term demand in utilities and railroads. These investments may lack the excitement of the next tech unicorn, but they offer something far more critical: stability and predictability in cash flows. Even during economic downturns, railroads, for instance, have served as the backbone of commerce for over a century, and Buffett understands their importance isn't going away anytime soon. Buffett's reasoning for these moves lies in his ability to think in decades, not quarters. When most investors are driven by short-term market trends or headline-grabbing sectors, Buffett zooms out. He's always said, "Our favorite holding period is forever." But buying companies with moats, businesses protected from competition through unique advantages, he's not just investing in today's opportunities, he's securing tomorrow's prosperity. These purchases aren't just financial decisions, they are declarations of confidence in the future. While others react to market noise, Buffett moves with a sense of calm certainty, relying on principles that have stood the test of time, and as history shows, his bets are rarely misplaced. What you can learn from Buffett's actions. Warren Buffett's recent moves in the market aren't just investments, they are a masterclass in resilience, foresight, and the power of simplicity. They provide a roadmap for anyone who seeks to navigate uncertainty with confidence, offering lessons that resonate deeply whether you are a seasoned investor or just starting out. Buffett's philosophy can be traced back to the early days of his investing career, when he demonstrated an uncanny ability to see opportunity where others saw chaos. One of the most defining examples was his investment in American Express during the Standard Oil scandal of the 1960s. At the time, a fraudulent company inflated the value of his inventory, causing panic across the financial sector. American Express, which had unknowingly insured the fraudulent inventory, was seen as irreparably damaged. Its stock plummeted and analysts predicted doom, but Buffett looked deeper. He saw a strong brand and robust core business that consumers trusted, regardless of the temporary crisis. He poured 40% of his partnership's funds into American Express, a move that was met with widespread skepticism. The result? It became one of his most profitable investments. This boldness to act during uncertainty is a lesson investors can apply today. Sometimes the best opportunities arise when fear clouds others' judgment. Buffett's commitment to simplicity is another hallmark of his success. When he invested heavily in Apple, many dismissed it as a tech stock, an area Buffett historically avoided. But to him, Apple wasn't just a technology company, it was a brand. With a fiercely loyal customer base, a near impenetrable ecosystem, and a business model that produced consistent cash flow, Buffett understood Apple as a consumer goods company with the stability of Coca-Cola and the innovation of the tech world. This underscores a crucial lesson. Investing isn't about complexity or chasing trends, it's about finding businesses that are built to last. Another key takeaway from Buffett's actions is the value of patience and preparation. His significant cash reserves, often criticized by analysts as unproductive, give him the power to act decisively when opportunities arise. During the 2008 financial crisis, when markets were in freefall and institutions like Goldman Sachs were on the brink, Buffett stepped in with $5 billion in negotiated terms that most investors could only dream of. Earning Berkshire Hathaway a handsome profit when the dust settled. This reinforces the idea that preparation, both financial and mental, is essential. By staying ready, you can seize opportunities when others are too paralyzed by fear. Buffett's recent investments in Occidental Petroleum also highlight his knack for understanding macroeconomic shifts. At a time when energy markets are caught between fossil fuels and renewables, Buffett recognized the transitional role companies like Occidental play. He didn't make this move impulsively. He saw value in Occidental's disciplined management and its ability to adapt to evolving energy needs. This reflects his ability to balance long-term vision and present realities, something every investor can learn from. Buffett's actions teach us to tune out the noises and focus on the fundamentals. His success isn't about chasing facts or timing the market. It's about understanding value, acting with conviction, and playing the long game. For those willing to adopt this mindset, his approach offers not just financial lessons, but life lessons in clarity, patience, and resilience. If you like this type of content, then press the like button and subscribe to our channel.